Hi, welcome to the market alert, or what is known now as the Twilight Zone, for Thursday, the 12th of October 2017. So yesterday the pound sideways. As I said yesterday, everything's going to be waiting for the Fed minutes, which when released were completely and utterly pointless, as you would expect. So the pound then moving higher. If we just have a quick look, the only thing that came out of this was that the Fed, as it says here, shows schizophrenic fears of low inflation is here to stay. Well, what a surprise. I mean, they pumped $4 trillion into the market. The only thing they've created with inflation is the 5 bubbles that we've spoken about many times before. There is no inflation in the public sector that they say there isn't. But of course, we all know that food prices will continue to rise. Everything, the cost of living has risen, and these morons tell you that there is no inflation and it's here to stay. Absolute utter nonsense. And also the metals market, don't believe it either, because gold pops, dollar drops as rate hike odds slide after Fed minutes. So they're not. They've gone from 80 to 73% saying there's going to be a rise until maybe 2018, but don't hang on to that one. We've got a live meeting in December. Yellen's clueless, the rest of them are clueless, and they're likely to raise rates. They know they've got to raise rates. No one's going to buy the $4 trillion debt that they've got on the balance sheet that they're going to start offloading this next month. Without it, it is at an attractive price. They must think we're all stupid to see what they're saying is going to have any effect whatsoever. I'm going to clear $4 trillion off a balance sheet. Who's going to buy it is the question, and at what rate? Also, Draghi is going to stop QE next month, or potentially going to stop, and then he's going to have to look at unloading the 60 billion a month that he's been buying throughout Europe. So when that lot hits the market, plus the 4 trillion, who's going to buy it? That's the question. And then the Bank of Japan are also talking about doing the same. Of course, one will start, the rest will follow. They'll have no choice, because otherwise they're going to end up sitting on a pile of debt that nobody wants. Not that anybody wants it to begin with, but that's the way they're obviously going to view it. So, wrong one. Let's just go back to the pound. So the pound moving higher there, and in the daily chart, we've got the market just breaking through the 132.49 that we had on yesterday. The next upside target for this, if it continues to move higher and the dollar lower, is going to be here, and then these other areas marked up here as well. So we'll see how the market fares at the 132.84. News-wise today, what have we got? Nothing really. Just the weekly unemployment figures from the US. But then later on in the day, we've got a few of them out. Super Mario's out later at 3:30, so keep an eye on this one. Powell speaking, Brainard speaking. Blimey, they've got them all out today, haven't they? And crude oil inventories out today as well, which is unusual, because that's because the market was closed on Monday for Columbus Day, wasn't it? So we've got all that lot today, so they might actually get a bit of activity after 3:30, but at the moment, as we've seen, the Dow, all it's doing is making new all-time highs on low volume, and there we go, 22,869, nearly at the 23,000. Surely we're going to get there, because that's exactly what they want. Yesterday, well, it was just sideways. I mean, it's just a standing joke now, isn't it, that this market isn't moving anywhere. We can't even fill a trade apart from one. It's staggering. I've never seen anything like this in the entire 20 plus years, well, nearly 30 years of looking at these markets. And this is the Fed's reaction. This is the market's reaction to the Fed FOMC minutes. It just doesn't stack up at all. You wait until this starts falling apart. I mean, they'll only have to whisper something and you'll see 100 points. But at the moment, again, because of the manipulation, they can just do whatever they want to do. It's just staggering. 18-point range for the FOMC meeting minutes that were released for yesterday. It's just unheard of. But it is what it is, I'm afraid, at the moment, and my advice is stand aside until this volatility turns around and picks up. Let's just have a look at, talking of volatility, this is the Nobel winner Thaler is nervous about low volatility. Well, I'm not nervous about it. It's I know why it's happening. They're selling the VIX. That's evident by the volumes that's increased over the last few years. This chap, I did watch the interview yesterday. He hadn't got a clue on why he believed that the market was showing low volatility. It's not rocket science, son. It's purely and simple that it's being manipulated. Trouble is, when you come from this sort of orthodox economics, you tend to, like Yellen and all the rest of them, you see, they're all brainwashed. They can't see it objectively and stand back and have a look and see what's actually going on, looking at the bigger picture. So they look at the, as I say, the orthodox rules that they were taught and say, well, we just don't understand this. We just don't understand it. But I'm very nervous about it. And that's, of course, as he says here, that I would agree with, that we seem to be living in the riskiest moment of our lives, and yet the stock market seems to be napping. It's not napping, it's being manipulated. The market's being driven higher for that reason, just to lull people into napping and thinking everything is okay. And also this one as well, Goldman allowing its clients to bet on the next financial crisis. The cash for difference instruments are back, the derivatives are back, and basically they get pennies on the yields and unlimited downside. I'm not going to bore you with the article, but read it, and it's again, here we go, it's 2008 all over again. So again, just watch that as well start to appear. And finally, let's have a quick look at the implied volatility. And as there was nothing major from the Fed, the risk seems to have disappeared, and we're down 763 to 751 for yesterday. But again, just stuck in this sideways range. Let's see what Super Mario and Co have to say today, see if that lifts the market a bit. But at the moment, there is absolutely no movement whatsoever. There's more movement around Christmas and in between the Christmas and New Year period than there has been this week in what would be considered a normal market, when there's all these geopolitical threats, debt at record highs and everything else. So again, it is the calm before the storm. We've just got to be patient and wait. Right, that's it for this one. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.